Hello everyone, welcome to course 1 session 2 in What is Financial Accounting by Sadaf. In this session, I want to talk about 3 forms of business ownership and then ethics in accounting. Let's start with topic number 1. In this topic, we have 3 types of ownership. Number 1 is sole proprietorship, number 2 partnership, and number 3 is corporationship. Let's talk about number 1. The sole proprietorship is the business owned by just one person. The advantage of this kind of business, this kind of ownership is that easy to establish and at least regulated, controlled by one person, and there is single taxation. But what is the disadvantages? The life of the sole proprietorship is limited to the life of the owner and difficult to raise capital. And the most important disadvantage is unlimited liability. What does it mean? It means that if the company goes bankrupt, the assets can be seized by the creditor for not only the company, the business, but also the personal assets of the owner. Let's move on to number 2, that is partnership. That's going to be a business owned by at least 2 people. The advantage very similar to the sole proprietorship and easy to establish, and there is a single taxation. However, there is additional advantages in that there is going to be a broader skill set. Why? Because there is more than one owner and the more access to capital. Disadvantages: a partner must agree on decision, and the partnership ends when one partner leaves a company or passes away. Just like the sole proprietorship, the most important disadvantage of the partnership is unlimited liability for each partner. Let's move on to the last one, corporation. The advantage of the corporation is that easy to transfer ownership in the form of the stock certificate. It's easier to raise your capital, and there is an unlimited life. One of the most important advantage of the corporation is limited liability. What does it mean? It means that if a company goes bankrupt, the most that an owner can lose his or her equity investment in the form of that stock, how much they pay for this stock. Now let's go to the last topics, ethics in accounting. Because of the financial scandal that happened over the last couple of decades, ethics in accounting come under major scrutiny. For example, Aaron was an agency, a trading company that collapsed after major accounting fraud was figured out in 2001. Estimated losses were $74 billion. Next, we have WorldCom in 2002, that was the second largest long distance telephone company in the US. They inflated earnings to maintain the company's stock price. They did this by overstanding its assets by $11 billion. So based on those fraudulent accounting practices, the US come up with SOX, Sarbanes-Oxley Act in 2002. This was the US law enacted to protect investors from the fraudulent accounting activities by corporation. SOX changed the regulatory environment forever. GAAP, General Accepted Accounting Principle. This is the standard set of the principle that the companies in the US must follow when preparing the financial statement. The accounting profession recognized GAAP as a guide for financial reporting. GAAP is very important, and I'm trying to prepare another course just only for principle. Thank you so much for joining me for session 2. In next session, we're gonna be talking about fundamental accounting equation, and introduce you financial statement. If you come and see me from Explore, please like and follow my page, and also share this video with your friends. See you next session.